If you have already watched my video on the Econet delisting and the relisting of the InfraCo company and have searched the internet about what other people have been saying, you would have noticed a lot of opinions, perspectives, and this. The Zimbabwe Association of Pension Funds advisory note of the transaction, which basically raised concerns rooted in the fiduciary, liquidity, and the governance implications for funds tasked with managing retirement savings. I've provided the link for the advisory note to those who want to read it in full, but with some of these angles raised, one interesting one has been raised by Eriko Siakwan, which suggests that the 2026 landscape rewards structural integrity over surface visibility, which is the angle of my video today. The argument here is that delisting is a move to build a human moat, restoring trust through a transition from adversarial combat in the general market to institutional governance in a specialized asset-backed environment. See, from a corporate finance perspective, the move is strategically sound. Telecommunications infrastructure is a global asset class that demands high multiples and US-denominated returns. By moving to the VFEX and carving out InfraCo, Econet is effectively future-proofing its balance sheets against local currency volatility. On the market, before the announcement of this transaction, the value of the shares was 505 ZiG cents and now it's 902 ZiG cents, which translates to a 78% jump, which can be argued as means to create value for its investors should they choose not to partake in the InfraCo company, which is a choice by the way. The planned development of the Econet Industrial Park and the integration of AI-powered analytics into the mobile network suggests a forward-looking entity that is outgrowing its constraints of a traditional local market participation, which has barely given them meaningful fruit, which in finance is termed as the valuation gap. This then explains that despite having 50% more data usage this year and record transaction volumes on its fintech platform, Econet has been trading at a multiple of just 1.4 times its earnings, while its regional neighbors are trading 6 to 8 times its multiples. But the market thinks it's worth Anyway, while it unlocks billions for Econet and its major shareholders, it leaves the local capital market smaller, weaker, and more concentrated. But if you're a business owner and all your projects require the organization to realize its true value during this AI race, what would your options be? And of course, the success of the Econet model would likely trigger a wave of similar delistings, the bandwagon effect. So, on one hand, we have Econet future-proofing the business, and on the other hand, we have the ZSE, the market that helped them grow, that might just lose 40% or even more due to the delisting. But what do you think? Let me know in the comments, and as always, you're welcome.